Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Wednesday the 10th of the 3rd, 2021. The time is 04:50 GMT, Asian session coming to a close, European session about to fire up, our lunchtime North American session. Right, yesterday then, Tuesday the 9th, we had a negative unopposed driver in the dollar, so no backdoor flows. The opposing positive flows went into the pound at plus 83, into the euro plus 59, and the yen was the positive rock at plus 14. Activity plus or minus 156. Intra week then, this is from Monday the 8th open to about 15 minutes ago. We've got a positive opposed driver in the pound at plus 224. Front and backdoor flows mainly coming out of the yen at minus 167, next out of the euro at minus 82, and the dollar is the positive rock at plus 25. Activity plus or minus 249. Finally then, intraday, which is basically what's happening in the Asian session to about 15 minutes ago. We've got a positive unopposed driver in the dollar at plus 74, no backdoor flows. The opposing negative flows mainly coming out of the yen at minus 63, the pound at minus 7, and the euro is the negative rock at minus 4. Activity plus or minus 74. Right, so just we're basically, so far this week we've had pound strength, yen weakness, and then we've had swings in the dollar. So Tuesday the dollar was weak, which was yesterday, and then now the dollar's now coming back up. Right, so what's going to knock this about then? Right, we've got, if you remember, Sunday we had positive China data, trade balance pretty strong. Monday we had weak Japanese GDP, JPY. Tuesday we had neutral Euro GDP, and Wednesday we've got pretty strong China CPI and PPI, producer price index. Today we've got the CAD's rates decision. And tomorrow we've got the ECB Euro rates decision. So and the RBA governor's speech was pretty neutral. Okay, right. We had a bit of noise out of China. They've been rowing back on their GDP forecast to a certain extent. They've been saying they're not setting GDP targets, and yet they're aiming to achieve greater than 6% GDP growth. Well, that's basically covering themselves, but the basic theme is there. The China data is now starting to ramp up, as we suggested. It's likely to accelerate through the second quarter, which we've not even started yet, and you're going to see, at some stage, you're going to see a massive ramp up in risk assets, equities and the like. Right, let's clear the decks then and look at what's been happening in the flows in the other asset classes. Our trades were swinging around as you'd expect, but they've come back a little bit. We're about 600 points in profit now. At the peak we're about 800 probably. But anyway, right, Euro complex then. The euro is strong except against the dollar, which is stronger. The yen is weak except against the AUD. So the AUD's quite weak at the moment. The pound is strong except against the dollar. What else we got? The Swiss franc is pretty mixed, but it's down. It's weak except against the yen, the CAD, the AUD and the NZD. Now, commodity currencies basically. What else we got? CAD. So the CAD is weak except against the yen, the AUD and the NZD. The AUD is weak across the board, and the NZD is weak except against the AUD and the yen. And the dollar is strong across the board. Right, so what have we got there? We've got at the extremes, we've got AUD weakness at the moment, we've got dollar strength, and take your pick in the middle, and you can see that the commodity currencies are to the fore: CAD, AUD, NZD. Right, let's have a look at the other asset classes before we make some analysis and some sense of what's going on. Right, dollar index. Right, dollar index, basically you've got this sort of situation. It's come back a bit, and then it's had a little perk up again. So the dollar is thinking about staying quite high. Gold, what's gold do? Gold's basically been hammered and it's just come back a bit. Oil has come off a little bit, and what else have we got? Wall Street, S&P and tech are soft, but that's the batting order. So Wall Street is the strongest, if you like, S&P middle, and tech is the weakest, is the laggard of those. And then you've got the US 10-year bond and the bund. Right, what have we got? We've got this sort of situation. So the US 10-year, this is the price. So basically yields have been rising. They've now come back a little bit, and the bund looks sort of like that. So if anything, the yields are starting to come closer together. The spread is narrowing. So remember, this sort of links with our euro dollar. So the euro dollar is getting compressed at the moment via the bond spreads. Copper. Remember, copper had 1, 2, 3, 4, 5. Came back to the second one. Dirged. It went up a bit. It's basically at about 2.2 from the floor. Not from the floor, from the second pump. So that's where copper is. And interestingly, US steel, which we always like to look at, basically came up a lot yesterday, and it's coming up a bit now. So it's 0.55 from the recent floor. So in our modelling terms, right. So let's get rid of that then, and let's make some final decisions on what's going on. Well, we've got sort of we've had the China data cycle basically is showing signs of doing what we said. It's coming up. Equities haven't really recovered yet. China intervened in their stock market. Everybody's trying. So and the AUD. So we're long AUD dollar, which is still quite positive for us. We're 2 times AUD dollar, and we're sticking with it. And we're short NZD against the euro, the pound, the CAD and the AUD. So we're long effectively those 4 against the New Zealand dollar, and as I say, we're about 600 points to the good at the moment. So things are moving reasonably well. The key thing today then is this CAD's rates decision. Oil's come off a little bit, probably just to be wary. and also it was spiked up with a bit of geopolitical pressure. So that's where we are there. And we've got the European rates decision tomorrow. So you're going to see sort of volatility and swinging around, but we're sticking with these positions. These positions are pretty solid as far as we're concerned. So we're just in and we're just sitting back and riding the volatility and waiting for them to really start to kick on. Right, so I hope that was useful. See you again tomorrow for the daily briefing. Thank you very much.